Okay guys, so here's another example and I'm going to teach you a few more things in this video. So first of all, you want to mark out when you're looking for these type of setups, you want to mark out the New York midnight open. So the midnight open is at around 12 a.m. New York time. So if I look at the open of this, is a 10941. So this is the open, right? This candle. So I'm going to mark this out as midnight open. Okay, I'm going to put it at the top. Perfect. I'm going to decrease the size a bit. Midnight open, right? And you want to mark out the after midnight open, you want to start identifying the high of the day and the low of the day. So the high of the day is, as you can see, this is the highest point after 12 a.m., right? So this is the high of the day. This is the highest point. So I'm going to mark this high edge, high, okay? And you want to look for, you can only look for the highs and lows before 9:30. Once the 9:30 period starts, you don't want to look for, you can only look for highs and lows before 9:30, okay? So as you can see, we have a candle close at 9:30. So this is actually the low of the day, okay? So this here is the low of the day. So if I mark this out, this is the low, L, okay? Now, this is considered as liquidity as well, because this is actually the low of the day before the New York session, before the 9:30 period starts, okay? So you wait for price to, once you have identified the low of the day, which is actually this candle, surprisingly. So we go to the 1 minute time frame and we will look for a liquidity sweep. And if I play this through, we have the liquidity sweep. Now we wait for market structure shift. And if we play this through, we got this beautiful move. Oh, sorry, it was nothing. So if I play this through, I think we got the market structure shift right around here. Boom, 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 right? This is a break of structure as well, but there's no fair value gap. So when there's no fair value gap, you can go down to the, you go up to the 2 minute time frame and you can look for your entry as well. There's some fair value gap here, right? So let's see if we get our entry from here. And we do not. So when you do not get your entry, you look for another market structure shift, which happens right around here, and you take your entry from this fair value gap, right? Very simple. You take your entry, and as you can see, now I'm taking my entry from the very first fair value gap that was created, as I explained before. So there's also some fair value gap around here. So I want to put my stop loss right below this level, just to be on the safe side, because price can come down to this fair value gap and it can go up from there. So make sure you are cautious about that. So now where would you want to be taking your profit levels? Now there's a high over around here. So I will take some partials here, and then I will take some partials here, and there's some fair value gap around this level. So this would be my trade, and let's see how this plays out. And kaboom. Yep, sorry for that. That was a car outside my home. But anyways, as you can see, it hit the take profit level. You might have gone stopped at break even here, but it just really depends on you how you trade, what's your risk management plan. But anyways, as you can see, there was a sharp movement. And as you can also see, is before we broke the structure with momentum, you can see these 1, 2, 3 candle, they have huge volume. So this is what you should be looking for, okay? And then we had this beautiful fair value gap. We filled this fair value gap, and then we went up. Very simple, guys. I'm going to give you guys one more example, and I'll end this lecture.